Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick.
Thanks for inviting me on, Jim.
Ford is about to announce it's going to lay off 10% of its global workforce. What's behind that?
Well, what's behind it is the 18.4 million units that sold last year from the, it was a huge car year. And we've been talking about this for some time. The same uptick in interest rates, more than an uptick really, 90 basis points skew from the 30-year low. The same interest rate tightening has had its impact on the car business, and not just new sales, but the fantasy side of it, the leases, where leases are crucially important to the economy because they allow any American who wants more car than he can afford to drive one.
So once you take that factor out, plus all those people who took out those 9-year car loans, they have to pay those off, and they're driving a car worth less than the loan now.
Well, but it's a good thing they're driving, for the most part, Japanese cars because they're built to last. I say that as someone who's got it's a 17-year-old Lexus, and I'm just going to drive it till it dies. So I stopped making payments many, many years ago on that, and it's not good for the economy, not good for the auto manufacturers, but I'm glad they finally got around to making cars that would last.
Well, I bought a 1995 Ford Escort, and we're still driving that, and that car was picked the economy car of the year for reliability. And then they stopped making them.
My first car out of college was a Bimmer, and it was kind of a rare model. It was a 2004 door, which was the top of their line at the time it was imported back in 1968, and it needed a complete overhaul every 8,000 miles. You had to do an engine tune really every 3,000 or 4,000 miles, and with the valves, new spark plugs, new this, new that, and it took the Japanese to teach the Germans how to make a car that didn't need quite so much attention, although the Germans messed it up anyway with all the fancy electronics that tend to break over time.
Yeah, I understand Volkswagen's high-pressure fuel pump is a real dog, and it'll cost you $8,000 to fix it.
Well, and it's amazing, some of these cars, they're a marvel of engineering in terms of the power that you get from a relatively small block. They've got them all, even your basic nuts and bolts cars these days have turbine blowers in them. But the problem is getting to some of the parts. You have to. My son has. He flips Japanese cars. I'm amazed at what you have to take out to get to things like a water pump, or some basic part that's definitely going to need replacement at some point.
Well, of course, the dealerships rely on you having to come back to them because nobody else knows how to fix it.
Well, but some of them put competitive pressure on the others with these 10-year drivetrain warranties and all that. But I guess, the fact that the payment cycle has lengthened has in some ways been opportunistic of the increased reliability of cars over time.
The International Energy Agency says OPEC has had 96% compliance on its production freeze, and OPEC and Russia are talking about extending that freeze by another 9 months. That saw a boost in the price of oil, about $1 a barrel Is this really an honest hike in the price of crude?
That's so funny. You know, I've kind of stuck to one theme over the last couple years that we've talked, Jim, and that is that bull markets don't happen because the suppliers curtail prices and curtail supply and force prices up. Bull markets occur because of increasing demand, and you don't exactly have a bubbling global manufacturing economy that would eat up more oil. And so the idea of trying to fake a bull market with rumors about compliance on supply curtailment, you know, we've had a steady stream of this blather, this phony news for well more than a year. You know, it could be anything from increasing chaos in Venezuela, curtailing the supply of crude from there. Something happened in Iran to choke off natural gas. But by and large, all these countries, particularly Venezuela, are so desperate for cash that I would question the Energy Agency's assessment of 97% compliance. It's a bold lie.
We'll have more with Rick Ackerman right after the break.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. We were just talking about OPEC saying it's going to extend its freeze. Whether it really does extend it or not, is just the talk itself enough to affect the market?
Well, it only affects it in the sense that it makes oil do exactly what it's going to do on a chart. You know, I'm looking at June crude right now, and it bounced almost to the penny from what I call a midpoint pivot. There are two big legs in oil. The first started, I'm going to date it going back to June of 2015, 2 years ago, and it ended in early 2016. Crude staged a dead cat bounce, quite a bounce, I would say. From January of 2016, it was at $36, rallied to, let's call it 58 a year later. So we've been coming down since. And what this rally that June crude has staged from the low on May 5th, 43.76, that's 13 cents from where we would have expected it. What that's telling me is that the next leg down, crude is eventually going to come down to $29.30 a barrel. That would be versus the June contract, which will be the June contract will be expired by then. But the continuous contract, let's just call it $30 a gallon. That's where I think it's going. It would take a move above $58 a barrel to negate that forecast, but I would call that, I'm going to give you a high confidence on that forecast.
Does that mean the Canadian dollar then is going to continue to plunge with oil down that low?
Well, the Canadian dollar is definitely buffeted by the ups and downs of resource commodities, and yeah, I think it's going to put the loonie under pressure.
Stock up on those U.S. greenbacks. How is the U.S. dollar doing compared to other currencies?
Well, it's doing pretty well. I never bought into the idea that the BRIC nations, Russia, some of the energy producers were going to collude to squeeze out the dollar. The dollar is going to be around for a while simply because, well, for one, the world likes to be paying for something as precious as crude with snide, phony money that is an infinite supply. So for that reason alone, I would say that the dollar will never be displaced. It's too convenient to be able to get all this stuff for a currency that's infinitely available.
What about China's push to try to get the yuan into the number one currency spot?
That's a lie too. China isn't pushing for anything. They let their economy kind of settle the currencies, and you always hear talk about China accumulating gold or this or that, but I think they're really settled on just letting the currency happen. You might say it floats pretty freely in between fixed ranges.
We'll have more with Rick Ackerman right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Rick Ackerman. Rick, do you have any position on gold right now?
Well, I've liked the action in gold, notwithstanding the fact that when it corrects, it takes you right to the very limit of despair. And when it rallies, it doesn't quite get to where you want it to go, and I'm speaking strictly from a technical standpoint. But I've been using a longer-term chart, and in June gold, it gives me a projection of 1465, currently trading 1236, so that's a pretty substantial rally from where we are. And again, I'm going to mention that midpoint pivot where this bull market that began in late 2015. We had our first leg up, peaking in July of 2016 at 1374, and from that point to late last year, December 2016, we came all the way down to 1129. So the rally stalled to the penny at 1297.40. That's that midpoint pivot, and what it's telling me is if and when gold, currently 1236, gets above, let's call it 1300, a further rally to 1465 will become an odds-on bet. And I try not to pretend that I have a crystal ball, so I always leave the door open, for gold to go the other way. And if it does, worst case, I would back up the truck to buy gold at this price would be 1,080. That would be basis the current June COMEX contract.
Are there any other areas you feel that people have been ignoring but should be looking at?
Well, we've been accumulating a position in the bonds, doing so with an ETF vehicle that goes under the symbol TLT that tracks Treasury bonds with maturities of 20 or more years. And we had a real promising move up from a low in mid-March, and I think we're about to go into the second leg of that rally. So I'm pretty bullish on bonds, and I've been bullish for a long time. The rationale is that the Fed and the bond markets and everybody else has it completely wrong when they listen to this Fed blather about inflation. Inflation is not a threat. It won't be a threat. It's more like the silent prayer on everybody's lips, particularly in the oil patch. A little whiff of inflation would be a great thing when you're looking at always, this is for many years, a potential global debt deflation. So once prices start to deflate, we've got really big problems, especially in a very overheated U.S. real estate market. And so I'm I'm just not buying the inflation story, and that's why I like long-term bonds, muni strips, things that go out 20, 30, even 40 years.
You've noticed an interesting phenomena for the U.S. equity markets, the NASDAQ, how much concentration there is on just a few companies propelling the entire index.
It is absolutely stunning. You know, all these genius hedge fund managers are simply throwing other people's money at maybe a dozen stocks. And there's a list of 10 companies, this was out on Zero Hedge, that have been responsible for 46% of this year's entire rally in the S&Ps. And, of course, the usual suspects are the FANG stocks, Facebook, Amazon, Apple, Netflix, Google, and a couple others thrown into the mix, Oracle, and Avgo, which is the symbol that's Broadcom, a couple others. So, you know, all these guys, not by conspiracy, just by a tacit agreement, they're all kind of focused, fixated, obsessed with the same handful of stocks. And of course, at the end of the year, they get to say they were geniuses. Look at all the money they made. But I think we pumped these air stocks. Not that Amazon is air. I kind of like that company. But if you look at Google and Amazon, they're basically glorified advertising agencies. And, you know, you get a feeling that all that capital could be doing good elsewhere, but nobody has any ideas, and certainly nobody wants to get into basic manufacturing or into a business where you have to make actual stuff. It's much easier to be Facebook with the zillion subscribers and say, you know, all we have to do is figure out new ways to monetize them. But really, you got to keep in mind that they're just advertising agencies.
Going back to the auto sector, with Ford again expected to lay off 10% of their workforce, what kind of a factor is Tesla in all this? Apparently, their capitalization is now bigger than Ford or GM individually.
It's really funny, you know, when you get a company like Tesla, which has nothing but, there's certainly some very real problems there. You know, there's the problem of integrating battery production so that they have that output is smooth, that they can promise they'll deliver X 100,000 vehicles next year. And I would say they've done a pretty good job managing the problems, but and they have some amazing technologies brewing in battery storage. You know, even storage with instead of lithium ion or, you know, these very heavy lead-based batteries, they're getting into power storage in graphene. So I guess the technological horizon for a company like Tesla is amazing, and I guess that's reason enough to push the stock. But you got to wonder, really, you know, with the layoffs at Ford and GM, it's as though all the old stalwarts, brick and mortar is no good. Out with the old and in with the new.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Any questions for our guests or the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.